My last Bitcoin analysis was saying that I think price just saw a bear trap trapping bearish people before it's getting ready to pop up to the upside rather aggressively. And I gave the case A that it has to happen ASAP, even though it happened several hours after I thought. It stayed sideways longer than I anticipated, but it still happened in the direction that I anticipated. But the special thing about that episode is I showed you how to use EMAs in a way that I guarantee you never heard before. And not just the way I said it, but the concept in general. I bet you have never seen it. And it could help you drastically. So go ahead and click this link right here if you missed that. Regardless of price already having gone the way I suspected, I was guessing. However, you're going to be able to apply what I taught in that episode to your future TA and the way you see EMAs. It was a cool episode. I'm surprised I hadn't done that before. And I'll also link you to it at the end if you didn't jump off here. Today's episode, what we're going to do is, now that the move has started, is what are the obstacles to the upside? When can we expect things to go boom and retrace? And more specifically, though, as the expected retracements or just natural retracements happen in oscillations to the downside before attempting farther up, what are we looking for very specifically as Bitcoin takes a breather? What are we looking for in signs of weakness so we can better be on our toes to determine, hey, this is a normal small time frame retracement, or hey, it's actually in trouble, it's starting to break down. That's going to be the more valuable part of this assessment. So let's jump into Bitcoin price and let's get it. All right. I have a few things on. I will layer them here in a little bit. But first off, you can see that I had a micro trading channel. If I zoomed way in here, price broke up and out of it. So I don't need this micro trading channel. And that's why it's called micro, because it's not supposed to last very long, right? So I could take that off my chart. Now we're back into the larger trading channel that goes back several months, all the way back to March, okay, of this year, multiple months ago. This is a multi-month trading channel. It's like a double-decker bus, all right? So I got essentially two trading channels on top of each other. Price went above it, per my expectations of my last video. And again, I'll link you to that at the end if you missed it. It was a really good episode. All right, first off, what are our obstacles to the upside? Horizontals and EMAs are the easiest way to go. If you look left structurally, you have these highs right here. So you can make a box from wick high to wick high. That's going to be obvious. Just simply label that off. And those are the highs back from roughly the May 10th and May 11th. I'm using the 1 hour chart, just 1 hour wicks. So you're going to have obvious and clear resistance. Because of this whole formation, the highest local highs are these. That's going to be clear resistance. And from an EMA perspective, you have the weekly 10 creeping up on things. So let's go ahead and draw out this line. And then I will take into consideration a special line in EMA that I haven't whipped out in a long time. I think it's more like the daily 55, but I'm going to use specifically the 4 hour 200 EMA. It's one of my favorite bull market EMAs because most of the time, as long as Bitcoin is still in straight up raw bull market, any altcoin that hits its 4 hour 200 EMA, it's just perfect. It's almost a perfect buy every time, assuming it's still altcoin season. Again, we're way outside of altcoin season, obviously. So but I'm going to use it in a different way. So I'm going to label this, make this line red. I'm essentially extending it. And now I'm going to change this to the 4 hour 200. I want to layer this on while I'm on the 1 hour chart. And I'm essentially showing you how I'm piecing together how I can manage essentially my expectations of price. It's this simple. I'm showing you something extremely simple. Watch. Just horizontals and EMAs, and that's pretty much all you need for now. Watch. And I'm pretty sure that aligns with the daily 55. And it's close to the daily 55. The daily 55 is always close to the weekly 10 as well. So they're pretty close together. Now, what do we see here? Well, the horizontal matches up with this ever important EMA, but it is a little bit below the weekly 10. So in general, what we're seeing for upside resistance, now that price has broken above this channel and maybe wants to use it as support. So let's zoom way in there first. Way in there. So here's the question. Okay, remember at the beginning, I said, how we're going to try to analyze are what are the upper resistances and what things on retracements are we looking for to determine is it breaking down or just retracing before it continues up, right? Okay, so here's the big picture now that we've pieced the things on my chart together. Oh yeah, and this white line is the weekly open. So if you went to the weekly candle, this is where the weekly started at second, number one, the first trading second of the week. It's usually a very important line, and obviously look, it got right up to my all my lines are like perfect, right? I mean, look at the channel here. And then it wicked exactly down to the weekly open line. All right. Now, is Bitcoin going to count this as a retracement before heading up to the next resistance? That is the main question. Okay. And what we're going to try to do is figure out with other tools, is this enough to hit this? Okay. Or does it need to pull back more before trying up to hit both that target and this horizontal? So the orange line with this, okay? Was that enough? Yes or no is the question. Let's go now put on the 1 hour 200 EMA. So we're going to have two different 200 EMAs. So this is of the 4 hour. This is the weekly 10, 4 hour 200, 1 hour 200. What are the rules of the 1 hour 200 EMA? Independent of having trading channels and all that stuff. Actually, we can just take off the trading channel. The rules typically are that if you come from below it without hanging out below it for a long time, okay, if you pump above it without using it as support, you have to come back down relatively quickly and use it as support before you can hit a significantly higher obstacle up. So this did not hang out very long. This is maybe, I don't know, 16 hours or something. Let me measure that out. Yeah, 14 hours. That's not quite enough. It bumped its head once and then went past it. So that is not respecting that line too much. So what I think is, I don't think these targets of 32K, okay, yeah, that's about 32K even. The bottom of this is 32. The top of this is about 33, which had been my targets for a while since price was down here, right? It's my initial target, and I think potentially up to 35, this move. But because this 1 hour 200 EMA rules, and if you look left, like you have over, I think it's over a 70% chance, especially if you're in a downtrend. But even in bull markets, if you have a big correction and the first time in a bull market this happens, you typically come back down and hit this. So what I think is more likely is one of two things in the very short term is it squeaks out one more higher high without testing this, and then it comes down to hit this orange line, which by that point would be about, I'll just draw it out, will be about there. Okay, that's possible as well. One more little pump up without pumping hard enough to hit this, and then hits this line. And then after it hits this line, I would have to reassess. I don't know. All I know right now in my assessment is that I think very strongly before 32,000 can be hit, this orange line must be hit with a very strong edge. Now, it doesn't, when I say must be hit, I misspoke. It doesn't have to. It's possible. But rather, you have a strong edge that it will happen before this is hit. Does that make sense? It's that simple. And so I have usually noobs come on my channel, and the reason I'm dressing noobs, saying stuff is because if one person or two people leave the comment, that means at least, 20 to 30 times more people think the same. So I've had people say, oh, you use the simple tools. Yeah, and you should too. I guarantee you, if you're using tons of indicators, ones that you pay for, they're probably distracting you more than anything. I guarantee you some of the best traders in the world are using very simplistic tools, and a lot of them are probably free. A lot of that fancy stuff is just to sell you things. It's like fancy shoes, Michael Jordans, you don't need. This is simple, and it's probably going to work. Just like my last analysis, it worked. And it was very simple. Actually, it was a little bit more complex using several EMAs, but it's still just basic EMAs. Simple. And a horizontal. That's it. Basic. Keep it basic, folks. All right? Anyway. Or the second price path would be it does not make a squeak out a higher high and then just, does something more like this. It just chops down. So I'm going to have to use a different tool. It simply chops down. It's made its current local high, and what it's going to do, if I can get rid of this, is it's going to just chop down, hit this, and then decide. Now, because this hasn't happened yet, I can't analyze if there's signs of weakness in this pullback, because as of now, this pullback looks really strong. It's above the weekly open line, which is this white line. It's used this white line as support, and the top of the trading channel as support as wrong one as well. So as of now, the pullback is very healthy. We don't have to question this pullback necessarily for weakness, because right now it's not weak. It more looks like this will be the pullback. And once it gets there, what we're looking for, if it's going to start breaking down, is how the candles interact with this line. If they're typically closing above it, that's good. Okay, so general closures above. You can have a few close below, but if one closes below, the next one or the one after has to close above. It has to close back above within 2 candles of that time frame, which is the 1 hour. So once it gets to the 1 hour 200, then you investigate the candle closures specifically. If it wicks $300 below, who cares? It's probably going to come right back up and close somewhere close to the line. It doesn't just, get close to there the first damn time, right? It doesn't just tank through typically, all right? Unless this is a total whale game, very unlikely. Rather, you're going to investigate how the candles are interacting with that to determine, is this a perfect pullback before it continues up to the next target of 32K, as we saw on the chart, or are we looking like we're going to break down and close below it? And if it does close below this, so it finds support somewhere below the orange line and goes back up, you can assume it's going to be a lower high. And where would it be? At the weekly open line at this. So if it does find support below this orange line, the next pop up is extremely likely to stop at 30,265. Does that make sense? So let me show you what that would look like. Found support below it, therefore when it gets back above, it's probably going to get up here, fail it, or get rejected by it, and then head down. Does that make sense? However, if you get more something to this effect, where it uses it as, it finds support right at it, maybe a tiny wick below, but only 1 or 2 candle closures below it at max, then you could assume that it has a better chance of hitting up here. So you can determine the strength of the pullback, whether it's at risk of breaking down or not, once it gets there, the candle interactions with that 200, keeping it extremely simple. And that's really all you need on your chart right now. You're going to get the price right this way with an extremely high likelihood. So right now, the chances are either it goes straight to the 1 hour 200 EMA without making a local high over 30,900, or it's going to pop up maybe 31, low 31s, just like $100, $200 above, little fake out before it then trickles down. We have an extreme probability to that. Once it hits there, once that happens, which I'm assuming it will, once it happens, you have a better probability of these targets being hit if the support finds the 1 hour 200 EMA. It finds support at it, not below it. But if it finds support below it, like this, okay, and then goes up, you have a better chance that this high will peter out at the weekly open line and then make a lower low, lower than whatever low it found as it missed support from the orange line. Does that make sense? And that's really all you need in the next 24 to 36 hours. This is it. Because I think it's extremely unlikely price bounces off the top of that channel, the green line here. I think this is maybe the third or fourth most likely scenario. It does come down and test this green line, then go straight up without touching this, but I think that's third. I think that's much, much less probable. There is a very heavy edge of hitting the 1 hour 200 because this rule works. I'm telling you, just try it, put the 1 hour 200, look left, and just keep dragging left. Well, the way it gets above it, it has to, if it screams above without using a support, it has to come back and touch it, right? And that's what we got. So you have my multiple price points on what support will be, structurally from an EMA standpoint, where we're targeting a pullback and what you're going to look for with strength. And then we have the upper targets, which are the weekly 10, the 4 hour 200 EMA, which are close to the 32 to 33K. We have a good idea of what price is going to do in the next 36 hours. It is mostly bullish, but if it starts flipping bearish, we know exactly what it's going to look like in the chart with a high probability. Is it guaranteed to do that? No, but we have a high probability of that's what it'll look like. Because it'll go up to the weekly, it'll go up to the weekly open line and get rejected after having found support lower than the orange line, and that's it. So hopefully that gets you through the weekend. I hope you found this helpful. And again, the video to my last YouTube analysis, which I think was special, teaching EMAs and a different way to use them, go ahead and click that video here, and go ahead and click this video here. If you haven't learned how to set up a chart like mine, I teach you in 28 minutes of the 28-minute TradingView tutorial. You just got Tim Avad Worldwide. Happy Memorial Day.